JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 10th of December 2020. So yeah, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at markets, a few of the charts, some of the charts that we looked at yesterday and this week. Basically just to see how everything is getting along. Yeah, but before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, quick update on Nikkei. Not much to talk about here. Still the same analysis remains, but just like I said, just wanted to have a quick update. Basically, the index continues to struggle with this 26,890 territory. This one right here on the top. Yeah, today did push a little bit higher. However, the yesterday's kind of sell-off in the U.S. equities did kind of weigh in here a little bit on the Asian markets, and Nikkei, for example, ended the day fractionally in the red, still below this 26,890 zone, but very close to it. So in a way, for now, I'm going to take a bit of a cautiously bullish approach still, yep, or even maybe actually I'll take a neutral stand just to be a little bit more on the safe side. So in order to aim for some higher levels, I would still like to see that daily candle staying and closing above this 26,890 zone, because what I don't want to see here is just a false breakout. So yep, wait for that daily close above it. In terms of the downside, well, I would like to see a drop and a daily close below the 26,405 territory right here, and then yep, we could go for maybe a few lower areas. Now Hong Kong's Hang Seng Index, and this one is still open. It still has around 55 minutes left of trading, so continue observing that one. The only little issue with that one is that it's a little bit leaning a little bit more towards the downside. However, again, it's too early to talk about that. When I covered Hong Kong's Hang Seng Index this a little bit earlier, basically I was talking about this key area of support roughly between the 26,256 territory and the 26,322 mark. So here between this area here, as you can see, continues to provide decent support even today. The index is trading in the red today, however, holding above this key support zone. Now on the other hand, also we have this downside line taken from the high of the 25th of November, which for now kind of continues to show the direction of the index, the short-term direction, of course. But if by any chance this area, this support zone here, does provide decent support, we might see a bit of a rebound here, a push higher, and then another test of this downside line, which if remains intact could send the index back down again. So basically it could be a bit of a roller coaster ride here, guys, so that's why be very careful. And on the other hand, looking at this picture, I mean, it could be forming a possible descending triangle here, but again, this is a little bit too early to talk about that. We would probably need to see maybe another rejection from this this downside line, and then yes, maybe then a third time could be lucky here for this index, and we could see this one dropping lower. However, of course, that's in the scenario if we get a reversal here from this key support zone. If the 26,256 level gets broken, this confirms a forthcoming lower low, and yep, further declines are possible towards the 25,909 territory right here, guys, marked by the low of the 13th of November. Now, jumping into the German DAX, the index here kind of yesterday drifted higher and managed to get itself closer and almost test that 13,460 zone. It just fell shy by around 5-6 points from reaching that area, and yep, it drifted back down and closed the day back about on this, just bang on this 13,347 territory. So or maybe a little bit fractionally below it if we take this number. So yep, for now, guys, it's a bit of a tricky one here, because like I said, yesterday the US equities did sell off, and maybe we'll have a bit of a continuation move lower today, a follow-up of that drift lower. But if we look at the cash index right now on the German DAX, we can see that the price is currently sitting at around 13,310 zone. So basically it's back below this hurdle, but still above this 13,213 territory that I keep talking about. So basically we're back in this little area right here. I'm going to take it a neutral stand, because now again, looking at this picture, what I want to be very careful about is, let's say if we get another push higher here, then keep your eyes on this barrier, this area where the holdup kind of is occurring for now, this 13,460 territory, and because this could be the upper side of the ascending triangle here again, which could be forming potentially. But again, for us to consider that idea, we would need to see another maybe a rebound from the lower side of this upside line here, taken from the low of the 13th of November, and then yep, we could maybe consider that idea. But at the moment, I'll probably take a very neutral stand. Well, a neutral stand for now, because again, all this area here could be a bit of a choppy one, and that's why I don't get cut out here, guys. So probably, if you want to be a little bit more on the safe side, wait for a violation either of this upside support line, or of this 13,460 zone. So yeah, keep your eyes on those. Now, FTSE. I looked at this one previously. Let me just, it kind of worked out nicely here. As you can see, I previously talked about this 23.6% retracement on the Fibonacci, which could provide support, and we could see a nice rebound here. Then yep, that happened. Let me just clear over the chart and start fresh. Now, first of all, we had a good reversal here from this 21-day EMA together with the 200-day EMA. So basically, as you can see, the 21-day EMA did cross above this kind of 200-day EMA here on the daily chart, and kind of this way indicating possibility for FTSE 100 to drift further north. Now, of course, the strength here in the FTSE is kind of fueled by the weaker pound lately. So even if we see, let's say, a bit of selling activity in maybe in the European equities and other European equities and the US ones, if the pound continues to weaken heavily, we might see FTSE maybe staying actually the same spot. So yeah, that's the kind of little game plan right now, guys, for FTSE 100. Be very careful for that one, for now, basically it's a bit of a tricky one at the same time, because like I said, if equities start drifting lower, of course it could also apply pressure on the FTSE 100. But if the pound continues to weaken, not to strengthen, to weaken, then yes, the FTSE might kind of stay under buying interest, and basically could balance each other out, and FTSE might remain flat for the time being if the rest of the indices are going to be correcting a little bit lower. So from the technical side, what you could also see, look at here as the 6,464 territory here. A drop below this, yep, could open the door towards lower areas. However, what I'll keep an eye on here is, of course, this upside support line. There we go, right here, taken from the low of the 30th of October. And in a way, all this kind of works out nicely here with this level, with the 6,464 territory, because a break of this upside line and then a drop below this level, yep, could open the door towards lower areas, where my next target here could be this one right here, the current lowest point of December, near the 6,264 mark, approximately around there, guys. It also kind of almost coincides here with this 200-day EMA. In terms of the upside, well, my best target here for now is this one, the highest point of March of this year, near the 6,856 level. So in a way, as you can see, if this upside line continues to provide decent support, then yep, we could see a nice push higher. Now jumping into DXY, quick update here. DXY yesterday popped a little bit to the upside, as you can see, and yep, got closer to this downside line, but still not too close. Still has a bit of room here for more upside, and in a way, if this provides this downside line provides good resistance, then yep, we could see maybe another round of selling. So again, although we are seeing the DXY kind of pushing a little bit north here, still the pressure remains here, guys, from this downside line, and in a way, don't rush into anything yet, and that's why I'll probably wait to see how this is going to play out near this downside line. If it gets broken, yes, it increases the chances for a possible move higher. However, I would prefer to wait for a push back above the 91.75 territory right here in order to get a little bit more excited with the upside, because at the same time, the price would be placed above the back above the 21-day EMA here, shown as the yellow line. Quick update on gold. Of course, gold is not really liking the stronger dollar, drifted back down, and yep, moved back below this 1849 level right here. But as I've mentioned to you previously, guys, that's not going to be the selling point for me, because again, I would rather wait for a drop back below the 200-day EMA and this 1800 level, because here that's what could strengthen the downside scenario, and yep, more sellers could join in here. But at this point here, it's a little bit of a tricky one, so I'm going to take it just a neutral stand here, and I'm going to continue observing the price action and wait for this one to kind of give me a better signal. Litecoin, talking about signals, and you can see that yes, we are breaking this upside line taken from the low of the 3rd of November, and of course the most important is that so far we're trading below it. So although yesterday we also had a drop below it, but as you can see, it reversed sharply to the upside. So I'm gonna take a bit of a careful approach here, guys, and in order to aim for lower areas, I would prefer to wait for this a break of the 68.94 level. And if you remember my analysis on Litecoin previously, when I was saying that in a way, what we could be seeing here is a possible double top pattern, with the possible neckline being here near the 68.94, and that's the reason why I'm kind of sticking to this area for now. We had a break of this upside line, so of course it increases the chances for further drift lower. That's what I'm going to be doing, but yeah, like I said, keep your eyes on this hurdle, because it could be that good potential neckline of this beautiful double top pattern. Of course, at the moment, if we take this current situation, yes, we are a little bit more bearish than bullish. We are trading below the 21-day EMA. We're trading below this upside line, and in a way, it's kind of leaning a little bit more towards the downside here. However, if by any chance this crypto travels back, not about this one, but actually let me just adjust a few levels here, guys. If it travels back above this inside swing low here of 7th of December near the 81.79 zone, now that's where it could become a little bit more interesting for more buyers. So keep your eyes on that one for the upside. But for now, like I said, I'm leaning a little bit more towards the downside, because again, we're trading below this upside line, we're trading below this 21-day EMA, and we could potentially be forming here a possible double top pattern, but again, that's still a lot of confirmation needs to be done. Now, jumping into a few pairs, AUDNZD, I talked about this one, and looking at this beautiful move. Basically, if you remember last week, I already kind of mentioned that we are at a very interesting spot here. We were at a very interesting spot here. Basically, at this level here, the 1.0412, that's the opening level of this year. And basically, we saw it drift lower. We were moving within this falling wedge pattern, and what I was saying, that if we get a nice rejection from this opening level here of this year, then yes, the pair might remain in positive territory. You can see that yes, the falling wedge also worked out nicely according to all the TA rules, because as you know, these tend to break to the upside here, and yep, we're moving now higher. My next target for so far is going to be this 200-day EMA together with the 100-day EMA, which almost kind of coincide with each other. So for now, that's what I'm going to be targeting. That's roughly around the 1.0660 level. Something to keep in mind, of course, are a bunch of these tentative downside lines here, which could come into play. And in a way, for now, I'm going to keep an eye on this one. For now, it's a bit of a tentative line still, this downside line taken from the high of the 18th of August. But yeah, for now, like I said, it's a bit of a tricky one here. Actually, not a tricky one here. I mean, let me rephrase that a little bit here. No, everything's looking quite positive. Yes, we are aiming for this 200-day EMA together with a 100-day EMA. So yeah, that's my aim for now. Let's see how this is going to work out. Of course, we always have our stop losses in place, guys, and just in case this suddenly reverses against us, and we know that pairs do that, so I hope you do that. You know that as well, and you kind of protect yourselves as well. So for now, I would say if the pair somehow manages to drop back below those 1.0522 territory, now that's where it could become a little bit ugly for the buyers. Quick update on AUDUSD. So I talked about this one, and recently, if you remember, I've talked about this potential rising channel pattern. So far, the pair is moving nicely within it. We had a test of this yesterday. We had a test of the upper bound of the rising channel. This key resistance area near the 0.7484 territory, also something that I mentioned. And just to show you what that is here, that's the highest point of July 2018. Now, given that we already had a decent kind of up move here, I would say, I mean, let's keep a close eye on this area, because if it provides decent resistance, well, I mean, maybe we could see a bit of a correction here lower, and especially if DXY starts pushing higher and breaking this downside line, then, well, it could turn out to be ugly for AUDUSD, and we could see this one reversing sharply to the downside. For now, everything is, of course, leaning to the upside. However, like I said, given the already kind of up move the up move that we already had, I'll be very careful near this area right here. So let's see how this is going to play out. But yeah, for now, that's the case, guys. If we get a strong pop above this, wonderful news for the buyers, of course. Yeah, we'll start aiming for some higher levels, but at the moment we should be very, very cautious. Okay, NZDCAD. So something that I've mentioned to you guys yesterday and the day before yesterday, basically after we had this strong slide lower, what I was saying that, in a way, yes, we are seeing a bit of a correction here higher. Yesterday, I've picked up on this pair and saying, yes, we did have a move higher here. And on yesterday, in my trader's tea time in the evening, we were kind of balancing near this hurdle right here. And what I was saying that, wait for it, guys. Wait, because although everything's looking quite positive, we are struggling with this hurdle, this 0.9045 territory, marked by the high of Monday. Although we did get that overshoot, yes, wonderful, but look what happened here, guys. It drifted back down. It ended up moving lower. However, again, this is where I was saying that keep your eyes on this level here on the downside, the 0.8987 territory, also marked by the marked by the low of Monday. Here I need to see a nice good drop below this. I would need to see the daily candle staying below this area in order to aim for some lower areas. You can see that this morning we're having a bit of a corrective move here to the upside. However, the pair is struggling with this highest point of July. Is that the highest point of July? Yes, that's the highest point of July, guys, near the 0.9011. So if it continues to do so, to struggle with overcoming this barrier, and instead if it starts reversing back down, keep your eyes on this hurdle, the low of Monday, or in other words, actually the current lowest point of this week near the 0.8987. A break below it will confirm a forthcoming lower low, and my next target will be this highest point of September near the 0.8942 territory. USDJPY, quick update before I actually run out of time. I need to kind of speed up a little bit on this one. Basically, it's traveling back up here. It's moving back above the 21-day EMA. The pair is showing some strength here. Of course, the yen is showing maybe a little bit more weakness, I would say, instead of the dollar showing strength. So yeah, so the pair is moving higher, and if we remain above this 21-day EMA today, then my next target is this downside line taken from the high of the 24th of March. So, and then I'll take it from there, guys, because we are at a very interesting spot here, because in a way, also something for you to keep in mind as well, that in a way, if it travels a little bit higher, hits the 104.76 territory, it might not even overcome it, because we have ourselves here a little range between the 103.65 and the 104.76 levels. So yeah, keep that in mind, guys. Or what we could see here, given that the proximity of this downside line, we could see an overshoot above this 104.76 territory, a test of this downside line, and then the pair could reverse back down. Oh, we have seen these happening several times, guys. So yeah, keep this in mind. I mean, this could be an interesting one here. For now, like I said, if the rate somehow remains above the 21-day EMA, then I'm leaning a little bit more towards the upside, but only up until here, up until these two areas. GBPCHF, quick update, drifting nicely to the to the downside, and what I was saying here with FTSE, guys, this could keep FTSE kind of it's somewhere above, I would even say above this upside line here, although it's a bit of a tentative one, but nevertheless. Now you can see that the pair failed to move back above the 1.1911 territory. I talked about this level here, guys, recently, and what I was saying, that if we get the daily candle remaining above this area, we did get an overshoot, but if we get the candle remaining above this, yes, we could maybe go for higher levels. But as you can see, nothing like that happened. We just get a false breakout, and now today we're seeing a bit of a reversal back down. So in a way, everything's kind of leaning a little bit more towards the downside. However, I would prefer to wait for a drop below the 1.18 territory right here in order to get a little bit more excited with the downside. Euro against the Turkish lira, one of my favorite ones, and showing a bit of strength today. So let's see how this is going to play out. We have this barrier here, the 9.55 level. I'm still keeping an eye on it. I need that daily candle staying above this area in order to get excited with the upside, but we're not really getting that yet. So for now, I'm going to keep it careful, and I would probably say cautiously bullish, because we're still kind of hanging above this 21-day EMA here, shown as the yellow line. So, and another thing here is to keep in mind that look at the previous days here, we're really getting into squeeze here, and basically the longer the squeeze, the bigger the pop could happen. So something for you to keep in mind. So yeah, guys, keep your eyes on that one. I can see Kirsten here saying good morning to me. So yeah, good morning to you, Kirsten, too. So I hope you're having a wonderful day, or I should say, well, not a day, but a good start in the morning. But coming back to the pair here, and the last one here will be this Euro USD, and this is what I was talking about yesterday, guys. So basically, Yesterday we were trying to make it, well, the pair was trying to make its way higher, but as you can see, this is what I was saying, that it failed to go above this 1.2155 territory, and what I was mentioning to you guys yesterday in my traders tea time and espresso, that if by any chance if it continues to struggle with this barrier here, this 1.2155, then there is a good chance we could go for a bit of a larger correction to the downside. You can see that this is what happened yesterday. We drift below this, or should I say briefly below this 1.2078 territory. I talked about this one, and that's by the way, the low of Monday. Although we did create a new low for this week, however, this low of Monday is kind of still providing decent support. So yeah, for now, be very careful here, and yes, let's see how this is going to play out. But if it starts dropping below this 1.2078 zone, which is the low of Monday here, then we'll go for a bit of a larger correction here to the downside towards this upside line taken from the low of the 4th of November. So keep your eyes on that one, guys. For the upside, to get a little bit more comfortable with the upside, probably like I said, I will wait for a good strong push above the 1.2155 territory. I would like to see that daily candle staying above it, and then I would aim for some higher levels. But at the moment, yep, guys, it's a bit of a tricky one, and there is a good chance we could see maybe a bit of a corrective move here towards the downside, towards this upside line. So, okay, guys, I'll have to wrap it up here. Thank you very much for watching and listening. My colleague is going to be jumping in right now with his analysis in German. So, yep, if you speak German, you can definitely join him after my video right now here. So, yep, but in general, guys, I hope you have a wonderful trading day today. Stay safe, have your stop losses in place, and yeah, everything will be fine. So have a nice day, guys. Thank you very much, and bye-bye.